Good afternoon, everyone, and welcome to today's webinar on cyber resiliency for the financial services industry. Today's webinar is hosted by Pandamatics Underwriting in partnership with Blackpanda, Castle, and Goldman Sachs. Before we hand it over to our moderator for today, I just want to go over a few points of webinar etiquette. So first of all participants will be muted and videos turned off just to minimize noise disruptions. And if you do have any questions, please do fill them out in the Q&A section at the bottom of your screen. We'll be sure to cover as many of those as we can following the discussion. And lastly, there will be a survey that will show up on your screens following the webinar once you exit. So we would really appreciate it if you could take the time to fill out 5 to 6 questions. Those answers help us to continually improve our webinar series. And without further ado, I'll go ahead and hand it over to our moderator, Alex.
Thanks, Austin, and hello, everyone. My name is Alex Yaffe, and I'm part of the Asia hedge fund consulting team at Goldman Sachs. I'm delighted to have been invited by Pandamatics to moderate today's discussion on the topic of cyber resiliency for financial services. We have 3 excellent speakers with us today. Struan Todd, Vice President of Underwriting at Pandamatics, Jean Yu, CEO and Co-Founder at Blackpanda, and Michael Steinkuhl, APAC Director at Castle Integration. During this session, we'll be covering 3 areas: pre-breach protection, post-breach response, and the role of cyber insurance in all of this. Cybersecurity is an area that only continues to grow in importance, demonstrated by the large number of breaches that we continue to see, and is an area that in my role working with hedge funds, I see attracting more and more attention from both regulators and investors. As Austin mentioned, we'll be leaving time for Q&A, so please feel free to use the Q&A feature on Zoom, and we'll cover any questions towards the end of the session. With that, let's get started with introductions from each of our panelists, as well as a description of the specific role that they and their firms play in the cyber risk management process. Michael, over to you to kick us off.
Thanks, Alex, and thanks, Austin and Pandamatics, for this opportunity here. So myself, I'm running the ECI offices out here in APAC. So it's primarily we are focusing on hedge funds, private equity funds, family offices, and we provide IT solutions for them as a managed service provider. So typically what we look after is infrastructure as a service, cybersecurity as a service, consulting, but these days there's also a big emphasis internally on application modernization, where we have a team of 200 of developers helping clients modernizing old legacy applications, because tying it back into today's discussion, those are obviously also a security risk to firms. Then in terms of what we're doing, just briefly, when we look at it from a NIST framework perspective, right, we have the identify, protect, and detect. That would be typically where we would be sitting. And then in the response part, we would have certainly an overlap with the Blackpanda guys. With that, over to you, Gene.
Thank you, Michael. It's nice to be here with everybody. My name is Jean Yu. I'm the co-founder and CEO of Blackpanda. We are a hyper-specialized cybersecurity firm in incident response and digital forensics. So we're the guys that you call after you've been hacked. Another way I like to describe ourselves is cyber firefighters. So predominantly around what we do as incident responders is we answer 3 primary questions when we come in after a breach. One is, are you still under attack? It's a common misperception that just because just the attack and breach that you've seen is the only thing that's ongoing inside of your network. Oftentimes we see that could be the first phase of a multi-phase type of attack, or there's other groups that have come through the same vulnerability or gap. And I think it's the most important thing right off the bat is just putting out the fire. The second thing is, are you still at risk? Meaning, is the way that the attackers got it, how they got into your system, is that door or window still open, and can they just come back in a few weeks and get you exact same way, or tell their buddies in the dark web and they come through the same way as well. And the third and last thing that we do for you is we determine what, if any, sensitive data was exfiltrated. That's quite important in terms of letting your clients, partners, investors, or regulators know. And with that, and I always like to say is that the best way to get our services is through cyber insurance. And I'm happy to pass that over to our partner at Pandamatics, Struan Todd.
Hi, Struan Todd, as Jay just mentioned, the lead underwriter at Pandamatics Underwriting. Pandamatics is a new Lloyd's cover holder established in Hong Kong. and presently in the process of finalising our arrangement in Singapore as well. As Jen has touched upon, we're the last resort, we're the safety net that ties all of these other solutions together. So if you were to have a cyber breach, getting past all of the security that has been put in place, which is kind of the inherent nature of cyber breaches, we've got an insurance policy that sits behind that to give you that additional safety net. Now that insurance policy is kind of made up of two main parts, which is first party and third party. First party being what looks after you and your business. So if you were to have a cyber breach, how do you deal with it? What experts do you get involved? We've got a full panel of experts that respond to that, including Blackpanda in that space. And then we also cover for third party losses. So if there are any liabilities or privacy notifications that come into that, we also cover all the costs associated there.
Thanks, Struan. So it's clear that all three of your firms have a distinct role in the cyber risk management space. And to help us fit together the pieces of the puzzle, it would be great to spend some time understanding how you work together. Michael, can I call upon you first to tell us how ECI as an IT integrator work with firms like Pandamatics and Blackpanda?
Well, let's use the concept you initially in the introduction introduced there with the pre-breach and post-breach, right? So we would certainly be involved in the pre-breach phase, where we look after our clients from a day-to-day perspective, which means we make sure that things like patching, MFA, those good things that everyone should have in place, and all of those guys in the audience who are regulated in Singapore under the MAS should have in place under the cyber hygiene regime over there, for example. So those are things that we look after. Other things in that space go a bit more, goes hand in hand with the MFA, if you will. Dark web monitoring solutions is other things that we provide, where essentially scour the dark web for leaked credentials and other information that can be used in social engineering attacks against individuals. Why I say this one plays hand in hand with the MFA, because obviously if the password as a factor is compromised, it's all the more important that I have a second factor up and running, right? Other things where we have a bit of an overlap then with the Blackpanda guys is in terms of the tool set that we use to protect our clients from a day-to-day base. One partner that we extensively lean on for the next generation antivirus, for example, is a firm called SentinelOne. Bit background on that, right? So we made that conscious decision over 2020 to switch out our entire client base from a legacy antivirus that we were using before into SentinelOne's product, because it just gave us more up-to-date protection from what we felt is needed at that point in time, especially when you looked at how the landscape changed over 2020 with how the perimeter widened of a firm and endpoint security became all the more important over that year. So this one was certainly one aspect into that one. It's a similar discussion that we had probably 2 or 3 years ago when it came to the next generation firewall discussions, facing our traditional firewalls in favor of Palo Altos. It's a very similar conscious effort behind that one. And one other thing to mention here would be things like a SIM, so log forwarding, log aggregation system that then ties back into our managed SOC. We have 75 security analysts or so on staff that investigate alerts as they come in. So that would be more from a day-to-day perspective, what happens with those alerts that happen all over the infrastructure, simple things like impossible travel alerts from Office 365 and all those things. But obviously in the mix, there can be some real threats now as well. And that's where Gene and his team would happily lean on a tool like a SIM.
Yeah, that's right. And the integration for us with ECI is particularly smooth, again, because of what Michael said in terms of our preferred usage of SentinelOne. For us on that aspect as a endpoint detection response platform, EDR, SentinelOne has a particularly good viewer for incident responders by way of how they collate the logs and is well suited for our use case. So one way to think about how Blackpanda works with ECI is that they're essentially like the castle walls and the infantry on top and fighting the good battle day in, day out. And literally it is, as Michael attests to, it is day in, day out that you're getting attacked by rogues and bandits, coming through. And then if you have the unfortunate circumstance where a phishing link comes through and one of your users accidentally clicks on it or is tricked into giving their username and credentials on a very well-crafted spear phishing attack, like a Zoom invite or a fake Google Suite sort of interface, that's akin to somebody in your company giving the keys to the front door to the bad guys. And there's nothing really about how, that ECI can do to help you with that. And when that happens, then you've got us basically outside of the castle walls as your friendly neighborhood firefighters that you would call to come in and help you out there. And of course, if you have the really grave misfortune of having a very advanced attacker come through, then that might be able to get through, but that's rare as well, because I know ECI's protection is very, very strong along those lines. But probably a good idea just generally to have a fire station of firefighters on standby. And even better is that if you can have that all paid for very efficiently through an insurance policy, which we prefer as well, because it just makes things much easier in terms of streamlining our services and the whole process.
Yeah, so I might just jump in on that note there, Gene. There's a couple of components that are probably worth raising to those that are in the audience here. First is kind of the selection process when it comes to cyber insurance and what the benefits of having an Easy Castle and Blackpanda are already involved in the process. Now, when underwriting cyber risk, there are a number of aspects that we do consider, and that can be things such as, industry segment, revenue, number of records, the probable maximum loss that you can get to, different exposure markets, regional presence, et cetera. But the main one that I think ties in quite well here is the risk management profile. We do ask a number of questions about, does the company patch? Do they have antivirus? What's their firewall, et cetera, to try and get a clear picture of the exposures that we're insuring. Now, if we have partners like Easy Castle and Blackpanda involved in that process, we look at them in a very positive light, because we know that there's been efforts by those businesses to go above and beyond and not just go, well, I'm just going to buy a cyber insurance policy and that'll just save me, or I'm only going to invest in this and not even look at cyber insurance. We take all of that into consideration. Now, alongside that, if we do write the insurance policy for any of these businesses, we also do our activation slightly differently to other insurance markets. Now, if there is a breach to one of our insured clients, obviously, if you've already been dealing with these two professionals, then you'll know them directly, right? So in the event of a breach, what we encourage is, instead of calling a breach coach or a legal panel that happens for a number of insurers, we try and get the firefighters on the ground straight away. So we get Blackpanda in first. So in that scenario, we get Blackpanda involved. They start putting out the fire by doing the forensic work, figuring it all out. And then also from there, they drive a little bit wider and we get the rest of our panel involved. So if there is an issue of privacy, we do have the full suite of lawyers involved to be able to assist there. We have PR consultants to kind of tell you how to frame that message for your client base and try and minimize the loss overall. And as you'd expect, being an insurance product, we also financially pay out if there is the need for there to be financial indemnification in addition to all of those little services.
Thanks all. One thing I've definitely observed in my seat is increasing scrutiny from investors conducting due diligence on asset managers in the areas of business continuity and cybersecurity. And on top of that, a growing number of regulatory frameworks and guidelines, such as the MAS TRM guidelines in Singapore. In my conversations, it feels like that's also accompanied by a sense of cybersecurity moving out of check the box territory into an area of genuine concern. I'd love to hear about all of your observations in this space. Again, Michael, can you kick us off?
Yeah, absolutely. First of all, I see very similar things from our perspective, right? So as a virtual CTO for 60 funds out here, I get a lot of due diligence questionnaires, as you can imagine. And over the last, I would say, half year or so, I certainly saw a shift in the pattern of what investors were asking. Before that, it was around setup questions, pretty softball questions, if you would ask me, right? Now it changed completely. So 70%-ish, give or take, of questions on those due diligence questionnaires that I get are around cybersecurity. So things around employee training, awareness programs, phishing trainings, SIM, I mentioned that initially, that is coming up probably on half of the questionnaires that I saw in this year. So there's certainly a shift in focus and in mindset. And also from the conversations that we have, there's also the other thing is, in the past, many approached cyber as a box ticking exercise, whereas now it seems to be finally shifting towards there's a genuine concern around how can I protect my company, how can I protect the reputation of course, myself as the COO of a fund, for example, right? So there's the emphasis entirely shifted. So that's certainly a good thing that we see in the space.
Yeah, one of the things, just to add on that as well, is that I think there's quite a bit of value for folk in the audience to explore, even in the due diligence process, of conducting a hygiene check, right? Essentially a IT security audit to see whether or not you have malware or have been hacked. I mentioned before that most of the cases that we respond to, I would say well over 80 to 90% come through phishing-led attacks, basically tricking, the so-called weakest link in your chain, which is the human error side, right? It is really, if you see these examples of some of these spear phishing emails and attacks, it's very hard to determine, especially so quick, this digital age, we're moving so quickly through our inboxes and whatnot. To be honest, it is an understandable mistake to accidentally click on these things. And once you let those bad guys through the front door, the only way to find them is through a forensic sweep through your systems. Penetration test just checks the outside perimeter and sees whether or not your doors and windows are locked, essentially, right? It doesn't come into the house itself and go room to room and flip over all the couches and all the chairs and looks over under the carpet to see, what's buried underneath there. And you need guys like us who like sniffing around in there and to find that type of stuff. So we do see one thing to consider is, your big banks like your Goldman Sachs and your JP Morgans of the world, they have teams like us, internal, who are running these type of active threat hunt queries and forensic sweeps every single day, because their risk tolerance to not know that they've been hacked is pretty much zero. Now, obviously, that's quite expensive to have that internally, and so we noticed that well, definitely with even the smallest SME, we recommend minimum do one once a year, right? Just to check and clear out all the cobwebs and make sure that you're clean, right, at that point in time. Larger companies, like some of our banking clients in the emerging markets, will have us come through once a week or every 2 weeks on a regular recurring basis, and just constantly just checking and sweeping through. And that to me is something to consider as well, as just part of due diligence of just running a compromise assessment, being able to say from a third party perspective, or having a objective third party come in and say, yep, at this point in time, at this date, you're good to go. I think that's something that we're going to see more and more these days with the prevalence of phishing-led attacks.
I suppose that the last piece of the puzzle, again, will be the cyber insurance piece. So when it comes to what we're seeing on the regulatory focus or rather the due diligence and regulatory framework, we haven't seen cyber insurance become a compulsory purchase. I don't see this happening shortly. There is certainly a shift in the mindset, and I think Michael touched upon that already, that businesses were interested in cyber, but kind of were interested because they wanted to tick a box. I think now we're seeing, especially across the Asian region, that's changing. That level of risk aversion, the efforts to try and mitigate losses, there is a big shift there. We did see a similar shift in other global markets. So the US was the first market where that really kicked off. It's now quite a saturated market when it comes to cyber insurance now. A large portion of the businesses there do buy cyber insurance. And then certain regulation in other territories also drove that. So in Europe, you've got GDPR. You've got a Privacy Act in Australia. Most of the markets where that has become compulsory, or not compulsory, but more of a recommended requirement, we see it heading in the same direction for both Hong Kong and Singapore. They are strong financial hubs. It makes sense that they start following suit. When it comes to what the cyber insurance product really does in those arrangements, obviously it just gives a safety net to the business, as I've said before, but it also helps handle, one, notifying regulators. So, if you had a cyber breach and you need to notify and tell a number of different clients, but also the regulator exactly what's happened, what you're doing, all of those costs are covered under a cyber insurance policy. So it really makes sense that it handles substantial losses and also prevents the business from having an inability to operate at the same time. So, if it was a ransomware attack and suddenly that information was disseminated and spread elsewhere, that kind of scenario is picked up and addressed as best possible with all of those experts I've mentioned so far.
Yeah, one thing on this one is a lot of the hedge fund clients that Alex and us are looking after are small-ish firms in nature, right? So you have like a 10-user shop managing a couple of $100 million. So their investors, institutional investors, would expect a very similar level of security than they would expect from other partners of theirs. So from a budgeting perspective, there's also an interesting conundrum in there that they hold to very high standards in terms of security, but budgeting-wise or size-wise of their firm, they potentially are not there yet when it comes to a lot of those technical safeguards. And the split between those two extremes is a quite interesting challenge for a lot of the managers that we look after in that space. Even though they want to do something on the cyber side, potentially it's not part of the budget at the moment. With that in mind, I mean, look what happened over 2020 when in March, everyone sent the entire user base into home offices. Everyone was struggling to get computers and whatnot in their hands. They were buying consumer grade stuff from the supermarket just to get people up and running, right? And I mean, what that did from a risk profile, talking about your area here, right? That's a nightmare. I mean, we're still cleaning that up, and I think many people are still cleaning that up to bring that back in line with what the intended strategy for that firm was when it comes to security, when it comes to device strategies. And I touched on that one earlier. The other thing is around the perimeter just widened. I mean, when MAS talks about, yeah, you need to have a strong perimeter security, what does that actually mean today? Does that mean every device? And if so, that also entails in a lot of different concepts and different tools to be able to protect your firm in that way.
Yeah, and I think just to add on to what Michael's saying as well is that, one of the reasons why we're doing this webinar today is because these three components that we're bringing together is, in my opinion, the closest thing you can get to 100% cyber risk transfer, right? Michael and ECI solution, I think, provides 90% of everything in terms of prevention and pre-breach and just making sure you're safe and having those castle walls up so that when the bad guys come walking by your house, they see those walls and say, well, it's pretty, that's a lot of effort to climb over those. Why don't I go to your neighbor who has none and go rob that guy's house, right? Now, the last 10%, I mean, like we talked about in those cases where accidentally or, accidentally let the guys through the front door, or you actually were unfortunately the victim of a more advanced attack. Well, you need to have backup, firefighters to come in and help maybe cover off another 5%. Well, in between the time that the attack happens and that Blackpanda can show up, well, then you have Pandamatics and Struan's solution out there to help pay for those damages, for that residual risk. And that to me is the closest you can get to 100% cyber risk transfer. Nothing is 100% secure in cyber, just like physical security, right? And I want to emphasize that because I commonly run into this misperception because people think about cyber as just like this IT problem. Cybersecurity is not an IT problem. It is a security problem. Okay, those are criminals who are coming to hurt you, and it just happens to be that they can get you in a digital manner. Okay, if it was easier and faster and more scalable to do it physically, they would do that. It's just an avenue of approach, and it's a mindset shift, I think, from that in terms of just this isn't something that you can just casually just expect the IT guy to just handle and be done, right? It's something that has to be thought out, just like your physical security.
Actually, there's one great point in there, right? Because we get a lot of those questions regarding internal IT versus outsourcing. Why should I partner with someone if I can hire a couple of great guys internally? Yeah, that's all correct. But I mean, you touched on that just now. There's so many different disciplines that in IT these days, right? Even I'm in IT for close to 20 years. I wouldn't touch firewalls, right? Yeah. I mean, I can do a basic configuration on those. Do I feel confident enough that it's secure afterwards, that no one walks right through the gap that are configured? No, certainly not. There's specialists in our team who do that. Right. And I think many firms need to understand that as well. That security is one of the very key specialist disciplines which require special people and potentially external people just to give you a different perception of what is standard, what is best practice in the market, and just get those, to your analogy here, get those castle walls up and secure.
Yeah. You know, sorry, you're just giving me a lot to segue off of. You know, because I like making a lot of physical analogies when I talk about cybersecurity to try to help the general layman understand, right? And if you think about, you know, would you ask a policeman to come put out a fire or a emergency medical technician to come handle, you know, a robbery case, right? I mean, even in physical security, we all understand that there are specializations in this field. Everything in physical safety and security, every term, if you put the word cyber in front of it, it exists, and it's just called something different because engineers came up with the term, okay? And there's a parallel to all that. And then understanding, and this is no disrespect to our, our folk in uniform out there protecting us, but that's relatively speaking a lower level skill than what it takes in cybersecurity because it's highly technical on the digital side. So if you can start thinking about it from that perspective, then you start realizing the magnitude of how specialized the field of cybersecurity is and how you need specialists in each of these regions, right? And so for us, I mean, on the Blackpanda side, this is why, to be honest, it's quite a task even just to be, you know, so-called hyper-specialized in incident response, because there's so many different types of cases, insider threat, different OT systems, ransomware cases, there's so many different types of incidents that can happen, and just being able to cover all of those is already a monumental task for us, which we're endeavoring to cover off for the Asia region. Yeah.
Thanks all. I think that one of the best ways to visualize the need for a cyber risk management strategy is to focus on a case study. One notable breach that comes to mind that this audience should be able to relate to is the hedge fund Levitas and the successful phishing attack from last year that ultimately resulted in the firm shutting down. Michael, could you tell us what happened there?
Yeah, so just in a nutshell, the founders of that firm were targeted by a phishing link that disguised itself as a Zoom invite. The guys clicked on it. Malware was installed on their devices. From there, the attacker started laterally spreading, so taking over the email servers, the email accounts from there, and then sitting essentially silently in the middle for some time, monitoring how business communication worked for those guys with third parties. And then once the time came, started emulating the pattern of how they are communicating with their third parties to speak to one of their fund administrators out here, I think it was in Hong Kong, to start then the process of fund transfers into third-party accounts. And so coming back now from what we would be doing, what could have been done from our side, I mean, obviously, the easiest way to think of this one is training, employee training, right? That needs to be a constant exercise, that people are not bombarded, but at least tested very frequently with phishing, simulated phishing attacks, that people are aware that they're on their toes. Of course, there's no 100% guarantee on this one. Another thing that we would have for this particular situation, we have desired state monitoring on our client base. So if a mailbox gets an automatic forwarding rule created in the exchange online, for example, our security team would get an alert, because technically that's always the first thing that someone does when they have a foothold over your infrastructure, over your mailbox. They create a forwarding rule. So even though you change your password, they would still be able to get your emails. So that would be something that potentially we would see it then and there. SentinelOne, SIM, another two examples, right, that potentially give some insight of fishy things going on that endpoint. But other than that, I think to Gene's point earlier, a very highly individually crafted phishing mail is probably the biggest threat to a firm. Because if it is something that is casted wide and far, probably the email security system would pick it up. So something like we have Proofpoint in front of our Office 365 clients. So there is intelligence in there that we can leverage when it comes to this targeted attack protection, link rewrite, so we can actually see who clicked on something if it later becomes known that it was a threat. our security team can go after and start investigating those. But if it is something that's just against one particular client and potentially from a business email compromise somewhere in the ecosystem, that's probably the worst possible attack. So if, for example, I don't want to pick on anyone in the ecosystem, but if a legal firm would have a business email compromise, and from this one, I now start attacking a hedge fund, and from there, I start attacking their fund administrator, that chain of events would probably be the worst possible case from a prevention perspective.
Right. Yeah. And in this particular case, the usual incident response solution would be to conduct a business email compromise investigation and make sure that we eject them out of the email access. Typically that's on a baseline of just immediately when you discover something like that is you should reset all the passwords, make sure you're the typical stuff, just basics. Make sure you're using complex passwords. Making sure they're like for me over 12 characters and using all the different combinations and whatnot. Turning on your dual factor authentication is quite important as well. So that's the first step when you realize that your email is compromised, and then having a group like us come in and investigate and see how deep the access was inside your email, so you're aware along those lines. And then making sure that you get your security hardened up immediately if it wasn't up in the first place, and trying to find how they got it. In the Levitas case, since it was a phishing link and they click, it's not exactly clear, whether that just deployed the malware and then they got access through those means in the emails, and then from there they were able to figure out how money was transacted, and were able to fool the overall group, right? One of the things that came to mind with all that is to consider as well using some quote unquote analog methodologies. Get a little old school in terms of how you approve transactions, right? Maybe using codes, right? And then storing that and announcing that off digital means, right? And changing those over time, right? These are, what I like to call old school tradecraft techniques that can be very difficult for cyber attackers to follow, especially if you're doing that all offline, right? So that's one aspect. The part of the Levitas case where the client or the LP pulled out of lack of confidence after this, that's very difficult to discern whether or not there's anything that the hedge fund could have done in a cybersecurity response posture to have given confidence to that LP that they were handling the situation, and that part is unclear to me about what they could have done after the attack to instill confidence in the LP. But certainly, maybe I can't comment further about that because I don't know about their cybersecurity posture or how they responded.
The insurance side is an interesting one to talk about this case. It's a tough one for the insurance market to address adequately, in my opinion. So the loss itself of it, like the actual payment of fake invoices, that kind of falls to a cybercrime / fraud coverage. Now this kind of coverage is sometimes picked up under a cyber policy, sometimes picked up under a crime policy. It's a very grey area, and some insurers look at it one way, some insurers look at it in another. Personally, I see it as a crime coverage. It's the same as someone stealing money or breaking, entering, and taking whatever was on premise. It's just done in a different way. Now, brokers and providers will disagree about that on a regular basis. But my example, and the reason I look at it the way that I do, is when we look at a cyber breach to an office sprinkler system. Let's say the sprinkler systems turn on in the office, suddenly rains over all your computers, there's huge property damage that's evolved from that. Now, does that fall to an office and contents policy? Does it fall to a property policy, or does it fall to a cyber policy? And these are the kind of problems that have been presenting themselves as the cyber insurance market develops, because the intention of some of these old insurance policies was not to address that risk. But cyber's also sitting here going, well, we're not sure that we should be picking up everything and anything that's remotely responded to by a cyber event. So for Pandamatics underwriting policies, we wouldn't pay for the actual loss experienced by the actual funds that have left to go in those fake invoices. We would, however, address a number of the issues that do come across that process. So let's take the event straight away. We're trying to figure out exactly what's happened and what the loss has been incurred, who needs to get involved. So first instance, Blackpanda would be called. Blackpanda would try and find out all the details. If there's any kind of sign of there being some entry, or at least try and clarify that there's been no entry into the business, they'll be able to do that part. Following that, they get our breach coach Crawford involved. So the Crawford and Company and us, we talk together to decide, who else needs to be involved in this process, what's actually occurred, how does the cyber insurance policy react. From there, and in this specific example, we would have involved lawyers to try and figure out exactly what needs to be notified, if the regulator needs to be told about what's been going on. And in the background, we'd also be kind of figuring out, what's the actual reputational damage in this scenario? What's the damage to this business? And how do we quantify where that loss actually falls? So there are a number of costs and assistance that would still be picked up under a cyber insurance policy that didn't necessarily have a cyber crime extension or didn't have a crime policy separate to that. But it wouldn't be there, and I certainly wouldn't be selling Pandamatics underwriting cyber insurance policies for the reason of covering those financial losses directly. A lot of that we would say is down to the running of the business, how banks respond, et cetera, but we would be there to hold the hand of the insured and make sure that they address the situation as best as they possibly could.
Yeah, if I could just chime in another kind of just tip on this in this situation. Business email compromise is a really common attack that we see. I like to equate it as though a sniper got into your system and waited, for 3 to 6 months, just, sleeping in this foxhole and just watching you and how money moves back and forth, and figured it out, and then, exploited the system. How about not authorizing financial transactions through email? I find that a little bit kind of simplistic. I'm all about the basics when it comes to security and getting back to the fundamentals. And dual factor authentication is there for a reason. When it comes to password management and whatnot. How about dual factor authentication when it comes to financial authorization transactions, and doing that in a secondary medium, like using Signal, like a encrypted chat app. I'm always getting in the case of my own team members, especially we had some new folk come in and trying to get authorization for financial transactions on email, and I don't want it on there. I want it on multiple mediums of dual factor, because it's very hard for hackers to jump from one app to another and track the conversations along those lines. Okay, so these are some very basic fundamentals that is a bit inconvenient. I would just comment that security and convenience are inversely related. The more secure you are, the less convenient it's going to be, right? And so there's obviously a happy medium in terms of what you need to run your business, but if you can get a quick process like that, and just jumping into a secondary communication protocol, it may not even be digital if you can do that. But these are some just fundamental things that it doesn't always have to be an email. We're so used to the litigious environment that everybody wants to do an email because it's easily searchable, so that in case we need to pull the tape, all that type of stuff, right? But yeah, making it easy like that makes it easy for hackers to come in and observe what you're doing as well.
Thank you all. So that brings us to the end of our main content and into Q&A. A reminder that anyone in the audience can use the Q&A feature on Zoom at the bottom of your screen to ask a question. I'll start with a question here, which says, what do you see boutique, so smaller asset managers doing with respect to cyber resilience? Struan, maybe I'll start with you on that one.
Sorry, you actually cut out just there. Could you repeat the question for me?
So the question was, what do you see boutique, so smaller asset managers doing with respect to cyber resilience?
Yeah, so obviously I can answer that from the insurance perspective. We are seeing more and more buying standalone cyber insurance policies. I think if you went back 5 years or so, pretty much no business in that space was buying a standalone policy. They might get a cyber extension under their other policies. Now, just to touch on what that actually looks like, a standalone offering gives you that first party and third party coverage that I mentioned at the start, gives you access to the full response panel. When it comes down to cyber extensions, it can be a number of different ways constructed, but realistically, it normally only covers the third party losses or a straight financial payout for that first party loss. So it doesn't actually give any of the hand holding process. A couple of insurers have tried to change that in recent times. I'm skeptical that that's fit for purpose. And I think, that actual process of in the event of a claim, how would you handle that? I think if you're only offering it part-time, really, it's really hard to get that schmick response in exactly the manner that you would expect. Well, I think if you are specializing in it, as we've intended to do, our clients are comfortable with Blackpanda, know exactly what Blackpanda is bringing to the table. We have a streamlined claim process where Crawford and our various different lawyers know exactly where they're meant to be brought in. I think if you've got minimal tie-ins left and center, it's really hard to maintain that. So yeah, certainly seen a lot of growth in that space, specifically in the Asian market.
Sorry, I have kind of a cheeky answer to this question. So what I see boutique firms doing in terms of resiliency is very little. And that's usually when I show up because they've been breached. To be honest, I find it very challenging to talk to boutique firms about cyber prevention measures until they've actually been hacked. And so we don't really spend a lot of time reaching out to firms unless they've actually been breached, because then they know how serious this threat is. And it is, to share a stat, it's 1 out of 5 chance right now that you're going to suffer a cyber breach, and it's serious. We see it every single day. We get called every single day with a breach coming in. And I would say though that boutique firms, after they've been breached and have gone through this existential crisis where they almost lost their business, certainly take cybersecurity very seriously. From there, I know, look, we would absolutely love to see them come in with the full solution that ECI has. For the more cost conscious, for me, that the bare minimum that you need to have is an EDR platform like SentinelOne in place, and then having eyes on glass, in terms of monitoring your the alerts that are coming out of an EDR platform. And we recommend, like I said earlier, to have that recurring compromise assessment, particularly right after you've been breached. You need that on generally a monthly basis, because those attackers are coming back. They successfully got in, they've reconned you for months. It's not easy for them to, they put a lot of time and effort, and they want to come back and get paid, right? So, so that's typically what we see boutiques, even that's what I just described, which is not a lot of money. We're talking about maybe $20,000 a year, and especially combined with a cyber insurance policy like Struan. So that's on the most cost conscious side. Although, after a breach, you should realize that your business almost went out. Almost was killed, if not, actually was. Obviously you're not really doing much if your business actually went down afterwards. But yeah.
Let me touch on 2 quick topics here when it comes to the lock retentions, because that's obviously an interesting topic also for smaller firms. Because out of the box, Office 365 that a lot of smaller shops would obviously use, they hold the locks for 90 days. Windows domain controllers, for example, is based on however many gigabytes or you configured for that log file, and then just rolls over. So in a very noisy infrastructure, if you're unlucky, you might have a week worth of logs on your domain controllers. So if you don't siphon them out to a third-party storage that can't be tampered with, you might be already in trouble then and there when it comes to investigating how things happened. And now, using a very recent example was that last month, early March, with that 0-day vulnerability in the Exchange servers. So they published, with that vulnerability, they published a set of, I think it was 3 to 5 IP addresses. If you had outbound connectivity to any of those, you need to do a very thorough assessment of your infrastructure, because that could account for your infrastructure being breached at one point. So without a serious systems in terms of SIM and log monitoring, it's pretty hard to go back in time and find those log files, especially in a centralized manner. So that's just one thing I want to add here about the importance of certain aspects. So out of the box is great, but it's certainly once you have been breached and once things happen and investigations need to take place, then the out of the box tools have serious limitations.
Got it. On to the next question specific to Singapore. Can you discuss more about the specific MAS incident response reporting requirements set out in the updated TRM? And I know that's something that we touched briefly upon earlier. Jean, would you like to kick off on this one?
Yeah, sure. So the recent MAS advisory for financial institutions Singapore requires mandatory notification to MAS within 1 hour of discovery of the breach. That's first and foremost is pretty big in terms of a mandatory notification. So that's a requirement. And then also a full incident response report, including root cause analysis and impact analysis, must be submitted within 14 days. That's a pretty tall drink of water in terms of a requirement, to be honest. It's I think that might, personally, I think over time, we're going to see that maybe extend out to 30 days. Getting started at, honestly, sometimes root cause analysis can't be determined within 14 days, even if we showed up immediately upon your breach, meaning you already had a relationship with us, or you already had a relationship with Pandamatics, ECI, et cetera, and we've come in, already worked with you and set up your incident response plan, and we're on standby, and it's smooth, and boom, even that 14 days to get that whole thing done is pretty challenging. So the implication there is that you should at least have a firm like us on standby, either on retainer, which is the more expensive option, which I would presume if you're coming to us, it's because you don't qualify for insurance. Because otherwise, I'm telling you, just go get insurance. It's much smarter to pay a fraction of the price through an insurance policy with everything else it comes with. But the other thing is that you're not going to make that 14 days if after you've been breached, you're wondering who you're supposed to call, what you're supposed to do, and you're on Google looking for an incident response firm. We may not even be available, right? We do sometimes have to turn away clients because our team's just flat out maxed out, right? And then you're gonna, it remains to be seen what MAS is gonna do if you don't get that report in within 14 days. But it's standard work for us that MAS has made a requirement, and there's a reason why. They need to know that the economy has cyber resiliency in place, right? So, especially the financial institutions.
On this one, I heard this, can't remember who said it, but it was pretty funny, saying that this 1 hour deadline around this is like you're being robbed on the street and you're asked to go to the police before you're allowed to go to the hospital.
Right.
There's a pretty good analogy around this 1 hour, which is really, really challenging for smaller firms. So all I'm saying around this one is you need to get your policies and procedure in place so you actually know what you need to do and who you need to inform once something happens, and not then try to figure out what to do, because then it's already too late, that 1 hour is gone.
Right.
Very aggressive timelines. On to the next question, and I'm going to pose this to Michael. From your experience, what have been the most successful methods for internal IT or COOs to get buy-in from senior management if there is hesitation for approving a budget?
Yeah, that's a good question. I think regulation obviously helps a lot, right? So from our perspective, we're very comfortable in those highly regulated environments. If something comes down the pike from the regulator, we are a global firm, so we look at other jurisdictions as well, not only Hong Kong and Singapore, but also what the US, UK are doing. So this one is certainly helpful. When something comes down the pike from a regulatory perspective, that one puts it then certainly on the agenda of senior management. The other thing in our space is certainly investors. So like I said initially, right, so the institutional investors, a high percentage now of DDQs are on cybersecurity. So people will certainly take notice if your peers have a certain level of security, you should have at least the same, because otherwise you might lose investments over it. So those should be the two things to bring it up to your senior management in terms of how you can address it. Regulation, just look what other jurisdictions are doing, and peer reviews, check what similar sized firms are doing.
Yeah, and I think from my perspective, because it's so cost effective to get our services through insurance, it's just start, if there's that difficult of a buy-in due to cost consciousness, you can get us on standby for a few $100s and have coverage for potentially low hundreds of thousands of dollars. So if you're a hedge fund and you can't afford a few $100s of the smallest cyber insurance premium to have, cyber incident response, legal, and crisis PR and all that on standby, you're probably having bigger problems than your cybersecurity posture as a hedge, right? So maybe just start small, in that sense. You come to us, in the most basic small solution will only be, maybe several thousand a year. And then just by itself, if you just want the insurance policy and just have service on standby, that's got to be the bare minimum, right? Yeah.
Thanks both. The next question I'll pose to Struan. How far behind is Asia's cyber insurance industry compared to the US?
So I suppose that there's two components here. There's the buyer side and then the selling side. When it comes to businesses buying cyber insurance, I wouldn't necessarily say that Asia's behind the US. I'd say it's a different beast. You know, in the US, it's a very litigious, class action driven locale. Everyone sues everyone about everything. When you're looking at the market in Singapore and Hong Kong, and that's where I'm exclusively focused on, the biggest concern for a number of these businesses is reputational damage and business interruption losses. So, you know, they're not as concerned about losing client information. They're not as worried about fines, and that's all understandable. There's reasons behind those decisions. I think that is starting to change, but I just think that they are completely different beasts. So, yeah, short answer there is that it's not behind, it's different. Now, when it comes to the selling side, so the actual insurers that are in the market, the focus throughout Singapore and Hong Kong has not been cyber insurance for a long period of time. It's been marine, property, all the old style insurances. And then it started diversifying into financial lines. Following financial lines, it's now started to lean towards that cyber market. And what really happened there was you had a couple of big insurers in AIG and Chubb who kind of just started offering it with everything else that they had. That's not to say there's not experts in the businesses. I'm certainly not being slanderous here, but I don't think there was a strong focus on targeting cyber exclusively or implicitly. And that's why we think there's space in the market for the model that we bring. We want to be the cyber risk resiliency specialists. We want to be the ones who don't just go buy insurance. We're saying, you know, here's a tool that's going to help you minimize losses. Here's something that'll mitigate damages for you. Here's a partnership so that if there is a breach, this is how you respond to it. And here's a disaster recovery plan and guidance as to how you do that. And then, yeah, sure, I'm still going to do the same thing as the insurers and provide you a strong, sound product backed by strong capital to ensure that you are safe in those scenarios. So I think, yeah, that component of the market is a bit behind. And I will say that I do expect, you know, in the coming years, more and more insurers or cover holders to enter that space and try and provide solutions like we are doing now.
Thanks, Drew. And also another question for you. What are some other examples of cyber attacks or losses that would be covered by a cyber insurance policy?
Look, there are a plethora. There are so many different examples that we could run through, but let's make it easy and say, you know, any unauthorized access, if there's any breach to a system or network, any exfiltration of information that is damaging, so any personally identifiable information records, all of those kind of events are meant to be covered by a cyber insurance policy. Now, the way that the wordings are structured are very broad. You know, where professional indemnity had focused on specific tight wordings to try and avoid a lot of coverage, because cyber insurance is so new, the plan is we want to write broad wordings, we want to pay claims, we want the reputation of the cyber insurance market to grow, we want people to be buying cyber insurance. So if we were just avoiding claims or minimizing the kind of coverage that we were giving, that wouldn't really encourage anyone to buy cyber insurance, would it? So that's the big focus for us at this point in time. I've mentioned probably the one scenario or the one component of coverage that we're not comfortable with paying. And that's because of that grey area. The other area is that property damage aspect coming from a cyber event. And Lloyd's insurers and cover holders are trying to address that with different risk codes. So, you know, our ability to actually write that, quantify the loss, determine the likelihood of those events. But again, quite hard for us to determine exactly what that loss looks like because it's such a new line of insurance. So yeah, I think that we're endeavouring to cover everything that we possibly can.
Thanks, Jordan. I'm going to squeeze in one last question before we wrap. So the question is, can you talk a little more about darknet monitoring services? Gene, maybe I'll kick off with you on that one.
Yeah, sure. You know, for Blackpanda, we use a tool called Dark Owl. It's a dark web search tool. It's quite powerful. You know, they have a great tagline, which is that the the founder of their product was one of the founders of the dark web. I think that's a good probably indicator of its a use case. So we use Dark Owl for all of our clients, complimentary dark web scan to see if you have any compromised information like emails, passwords, PII, any data records of your clients, just kind of complimentary to see whether or not you've been breached and didn't know about it. All of our compromise assessments will run a Dark Owl scan as well, just to check as well. So, I mean, there's no better proof in the pudding of seeing your data actually in the dark web, knowing that you were breached, and that you probably need to look into that, right? So, yeah, and there's monitoring services out there. We don't do that. We're hyper specialized in incident response. So I would refer you to any one of our threat intelligence partners. Actually, I'm unaware if ECI does something like that, so I probably best pass off to Michael there. But yeah, we do it as just a standard process of just sweeping the dark web, seeing whether or not we catch any of your data outside, and we'll let you know.
Yeah, taking one step back, right? So why is this one important? Typically, there's a lot of those spray and pray attacks, right, against things, and someone compromised your environment, potentially doesn't even want to do any further damage. They just take that information, the user accounts and whatnot, and just sell it off to the next guy in the dark web, who is then someone who actually wants to break in. Other things are, what was it, 2 weeks ago, that large Facebook data set that was published with 500 million records, right? So it doesn't necessarily have to be your company that is breached. It's just anywhere where you log in, you leave your email address, you create a password, you enter personal identifiable information, because all of the information that I have about you on the dark web gives a pretty accurate picture then around how do you construct your passwords. Is it any of your hobbies in there, children names, whatever it may be, number combinations. And I can use all of that then in a social engineering attack against your account. So it is, to Gene's point, it's very important that you actually know what's out there about you, so you can take the corrective measures then in terms of potentially changing your password, having certainly different passwords for every website, and at the very, very least, a completely different set of passwords for your corporate world than you do for your personal life. Use a password manager. There's a bit of a tip here, something like LastPass or whatever they're called these days, something that automatically generates a strong password that shows compromise. Another good thing is go to this website, haveibeenpwned.com, right? Just punch in your email addresses and see what kind of information are out there for you. Everyone can use that for free. It's not the perfect tool, but it's a free tool that gives you a good first indicator. And then towards the monitoring piece. So yes, we do monitor our client base as a service with this dark web monitoring tool. We go one step further. So if there is passwords breached in those attacks or available on the dark web, we're testing the password hashes against the client infrastructures. And if it matches against your current password that you're using for email, Office 365, whatever it may be, your account gets immediately flagged for compromise assessments and for password changes. So that it's a little giveaway then, right? So you don't have to change your password every 30 days if you have some early warning system in place, but certainly doesn't take away, sounds like a broken record, but it doesn't take away the need for two-factor authentication.
Thanks, both. We are at time, but before we close, I'd like to ask each speaker to give us a 30-second takeaway or summary on what financial institutions need to be doing right now as they think about cybersecurity. Michael, can you kick us off?
Sure. I think the first point I would say was to surround yourself with good, strong partners, right? That give yourself transparency into what they're doing. You need to be able to have an oversight into your providers. This is something from Singapore again, right? So we would be considered a material outsourcing provider. So the founders and the responsible people in the company would have or would need to have a certain amount of oversight over us. So that is certainly something important. Surround yourself with good partners. Make sure that they have certifications, things like ISO certification, SOC 2 certification. Someone externally check their level of security and their level of process and procedures. That's a very important thing for firms. And then just in general, especially over the last year, many firms had a lot of changes. Just go back now, take a step back, home working from home is certainly going to be here to stay. Take a step back, assess your strategy around cybersecurity, and go back and tighten up any loopholes that might be there in your infrastructure.
Thanks, Michael. Yeah, for me, I was like harking back to a giant sign at the front of U.S. Army survival school, which is that the key to survival is preparation, and always be hedged, right? So make sure that you have your hedge in place, because it's not a matter of if, but it's a matter of when. And there is going to be a cyber attack coming, and the time to figure out what you should be doing in that time is not when the crisis occurs, right? And so just a little bit of effort, a little bit of time in advance could save your company.
And my two are quite quick. It's overall risk posture. So understanding your cyber risk posture. So one, what would you do in the event of a cyber breach? How do you actually respond to that? Do you have a plan in place? And two, obviously a plug for myself here is consider a standalone cyber policy just to accurately have that exposure covered in the background.
Great. So a big thank you to Pandamatics, ECI and Blackpanda for a very informative session. Please reach out to the team by email if you have any further questions. But with that, thanks again. Please look out for the post-webinar survey and enjoy the rest of your afternoons.
Okay. Thank you.
Thanks very much.